Okay then, ladies and gentlemen, let's get straight into it. Let's not waste any time with an introduction, and let's get into what is currently taking place in the markets. It is Monday, the 5th of August, 2024, and it is a brutal Monday. And unfortunately, the cryptocurrency market is just along for the ride. It really has no sway in regards to the macroeconomic environment. We're going to be explaining exactly what's taking place in as layman's terms as possible. Some stats that we're getting this Monday is in regards to the Taiwanese market. It's the worst day since 1967. In regards to the South Korean market, down 8.8% today. It's the worst day since 2008. And in regards to the Japanese market, we're going to be looking at the Nikkei, which has been heavily affected by the Bank of Japan's rate hike decision, the first time in 30 years. It is the worst day in history. And these figures sound pretty bad. However, I don't think they're as bad as they seem, because in the current environment that we're in, there's a lot more room for volatility, certainly in regards to price action, given the size of the markets that we're dealing with and the volume of money that is now out there. What the Fed has done, or what central banks have done in the name of helping people or creating market stability, is actually introduce volatility, because they continue to inflate the system, which means the moves get bigger each and every time. So a little bit of perhaps comfort in what is uncomforting stats. We're going to be diving into all of it in this video. And as I said, let's not waste any time. Let's go over to a tweet from Mario Norfall, who is essentially reporting on this. And he says, Black Monday meltdown. The situation, global financial markets are in turmoil, triggered by the Japanese carry trade, leading to historic sell-off. Key points: the Japanese Nikkei, a staggering 18.2% drop in 2 days, including a 12.4% plunge today. US market, $7 trillion lost in value over the past week. Crypto crash over $1 billion in regards to liquidation in the past 24 hours, with Bitcoin and other cryptocurrencies nosediving. Fed rate stagnation. The Federal Reserve's decision not to cut rates, along a softening US economy, worsen market instability. The coverage of these factors has led to the investor panic and unprecedented market volatility, given the size of the markets and the ever-increasing money supply. Sources: Reuters, Market Insider, Federal Reserve history. So we're going to get into it all, guys. We're going to be explaining what is taking place, and a kind of broad overview of what is taking place is there is a readjustment that really started on Friday. So as Mario mentions there, the Nikkei, of course, has been massively affected. Let's go ahead and pull up the Nikkei chart. So the Nikkei has been something that we've been looking at, and we continue to say that really the Nikkei is just a short yen trade. It's a short the native currency of the country that the Nikkei comes out of trade. It's essentially a grab for real money, or not real money, something of value in a environment where money doesn't make a lot of sense over in Japan. You know, the yen is a perpetual short. It's called the Widowmaker for a reason. We're seeing it gain a lot of strength on the back end of that. So when they've started to up their interest and bolster their currency a little bit, there's been wind taken out of that sail, and of course that's had broader contagion across the world. So I think we have seen things like this before for the Nikkei. Believe it or not, this is the Nikkei index, so people are always very selective. Just a word of warning, guys, be very careful in regards to news flows today, because they're going to be overly horrific. It's not a great situation, there's no doubt about that. It's certainly not a situation that I didn't expect crypto to sell off to this degree, but it has, and you deal with what you've been given. We deal with the environment that we are in. In regards to my own portfolio, you guys know that I'm very heavy in the altcoin market. This is the first time since we got back into the markets in 2023 that my portfolio is now marginally down, and it is only marginally down. I'm very lucky to have bought the coins that I did when I did. Some of them are still up from our buys, but generally as a whole now I am down on my portfolio. And we're back in what we believe is this kind of accumulation range for many altcoins. But we'll cover the altcoin market once we've covered the sort of broader landscape. So the what's taking place with the Nikkei, of course, on the back end of the Japanese yen, we have seen crashes like this previously, is of course a massive factor. You know, we can see kind of periods, perhaps not in the one day. So this is obviously on the back end of what's taking place with the Japanese yen. It was a good place for it to sort of have a dip like this, very double toppy. This, of course, has had contagion. It will have contagion. Broadly, what you're getting taking place is a readjustment across the board. So on Friday, the probabilities, we're going to play this clip in just a second, of a recession went up on the back end of unemployment stats rising. And the Fed didn't really say that they were looking to cut any, they didn't really give any kind of definitive answer on Wednesday. They very much just played their cards very close to their chest. And ultimately, this has increased the probabilities of a recession. And what you'll get is people readjusting to that with unemployment data coming out in the way that it did. And of course, non-farm payroll weakening. People are now going, is there a recession around the corner? If there is, it's time to take risk off. If a recession comes further out, the markets will actually rally into that. And I'm still in the latter camp, guys. And I know many of you are going to be saying, how can you say that all in? Certainly in regards to the price action that we've seen. But if we take a look at something like Bitcoin, for example, yes, it's absolutely horrific. But in the grand context of things, I still do believe we're in an uptrend, guys. And I think pullbacks can be very severe, very steep. But ultimately, I do think, if we look at some of our altcoins like ICP, for example, it's not, from a broad context, as horrific as it may seem, certainly on the surface of things, if you're following the news flows. It is extremely bad. We've got coins today that are 10% down. Chainlink, for me, is 21% down. I'm still up on my position overall, but down. That's a big move, but this is the altcoin market. So to stick on the macro, there's a lot going on. Obviously, we have rumors that the Fed are calling an emergency meeting. You've got just an extremely negative news flow. You've got the VIX spiking, which is a volatility index for the S&P, almost to sort of pandemic levels. The probably most worrying thing for me is what Lockheed Martin is doing. Now, before we dive into Lockheed Martin, which is a military stock, finish things off in regards to where we are right now. And let's play this clip. So to sort of circle right back and give that overview, really what's happening is you're getting a readjusting on the back of the probabilities of recession becoming more likely. People will readjust. That's causing contagion in the markets. When we hear all these stats in regards to it's the worst time since this, it's the worst time since that, because of the nature of the world that we live in and the volatility that the Fed has introduced through and other central banks through continually inflating the supply, they actually increase volatility in regards to more money gets wiped off. The moves are often bigger because of the sort of money that's out there, and that's why the stats are as bad as they are. I'm hesitant to say that when others are fearful, be greedy, but that's what I'm going to be doing. Honestly, the resolve for this for me is, okay, I didn't think I'd see these prices again for many altcoins, but in some regards, as somebody who has a little bit of dry powder left and certainly some cash sat on the sides, I'll be taking advantage of this. Not immediately. I want to see how things sort of pan out over the next day or so. Let's play this clip because I think it really well summarizes kind of what's taking place overall. So I'll go ahead and mute.
Is this a small risk play or a real risk play?
It's certainly the distribution has changed, and in markets that's what matters. So outcomes obviously ultimately matters, but right now the distribution has changed and the market is reflecting that change of distribution. So the Fed is main aim of obviously its official mandate is inflation and unemployment, but really what it comes down to is it's really trying to prevent these negative feedback loops developing between the real economy and between markets. And what's happening now, we're in that reflexive mode where all of a sudden things are moving considerably faster. So, the economy last week, today, they're very little different, right? Nothing has really changed there. Although you will get people saying, see, I told you so, recession was definitely going to happen. What's really changed is the market, through positioning, has begun to price in much higher chance of a recession, but that's precisely what makes it more likely. And that's why there's going to be extra pressure on the Fed to act. And that's not to say that's the right move in the longer term, that's throwing more fuel in the fire, but the reality of the situation is the Fed is in a sort of invidious position right? Because if it does nothing, it will get a lot of probrium for, maybe not preventing a recession. And if it does do something, it'll get accused of pandering to the markets.
Of
but
course.
when it comes to this percentage that you're talking about, I think it's actually a little bit lower now. It's more like 20-25% of an early cut. But the problem is, if you do get an early cut, by the way, it's unlikely just to be a 25. They're probably going to do something bigger. So again, your distribution has changed, and your risk reward has really swung in favor of taking that outlook. Because if you're wrong, your downside is very limited, but if you're right, you have a very big upside.
So I thought that was the most sane clip and voice of reasoning that I've heard thus far. In regards to the economy, little has changed. We've had one very negative print for unemployment that has really caused people to rethink the probabilities of a recession and thus readjust as a result of it. On top of that, you've got things like what's taking place over with the Bank of Japan. That's put pressure on the Nikkei. The Nikkei is sort of sold off. That's causing people to unwind. And there's kind of this contagion in regards to what's taking place in this or readjustment in regards to the probabilities of recession. If people think there's a higher probability of recession, they'll hedge their bets to more of a degree. And that's what we're seeing, a kind of unwinding, which will be put back on if we don't go into that recession. I'm still in that we're not going into that recession camp. I'm sorry, guys. I know some of you are screaming at the screens going, all in. Come on, you need to see what we're seeing. I just don't see it. I don't see a recession in the next 2 months. The S&P will always rally 2 months into a recession. I did this with my Patreons yesterday. And yes, the price action is shit. In crypto, it kind of just feels like, maybe I'm so like desensitized as a crypto investor to this sort of stuff. I don't think the big one's here yet, guys. I could be totally wrong. And that's kind of what was being said there by the Bloomberg analysis, is that, are we going into that recession in the short term? If we are, okay, it makes sense to hedge your bets. But if we're not, there's a massive upside that comes on the back end of that, because markets will always climb that wall of worry and always rally into a recession. So on top of everything that's going on, probably the thing that I'm most concerned about is what I'm seeing with Lockheed Martin. Now, Lockheed Martin is a military industrial complex stock. This has now broken out strongly into new all-time highs. I should have really been paying a lot more attention to this. Why is that taking place? There's news in regards to Iran. A war wouldn't see markets do very well, in my opinion, at all. Are we going to get that? I don't know, but this is the one thing that you're getting with markets right now. We haven't got all the answers at this moment in time. Is that uncertainty has been introduced, a readjustment is taking place, and the markets are factoring and filtering all that in. And unfortunately, crypto, I'm afraid, guys, is very much just along for that ride. It's not done anything. It's kind of the victim in this whole thing, if you will. We need to just see what sort of plays out. So it's an absolutely brutal day. Hopefully we're giving some clarity to the whole thing. Certainly the Nikkei getting destroyed. The probabilities of rate cuts are very high now, that they're actually just going to go straight for a 50 basis points in the next meeting. There's a 60% probability they do one beforehand. There is rumours, although not confirmed, I'm afraid. This is from Good Morning Crypto. Great guy to follow, by the way. Breaking Fed to call emergency meeting today regarding interest rates after Japanese stock market. You could see... So this doesn't, by the way, the Martini guy this doesn't mean a damn thing in regards to anything. That's meeting dates, and this is looking at the meeting in September. We could see an emergency rate cut, and this, of course, then is also so not only have they increased the probabilities of recession, this is also increasing the sort of what I think is an idiosyncrasy out there in regards to every time the Fed lower interest rates, the markets crash, which quite frankly isn't true. So the Fed lowered interest rates here. The market actually went on and rallied into a crash that took place nearly a year after, which is what we think happens. Fed lowered interest rates here. Took a while for the actual crash to take place. Here, we're already in a crash. Here, they lowered interest rates. The market actually went up massively. Here, they lowered interest rates. Market went up. And this is where I think we are. I think they're going to lower interest rates. We're not going to get that recession. The markets are going to recover, but a crash comes later on down the line. And we're still in that camp, guys, despite the price action that we're seeing today. Yes, it's brutal. If we take a look at some stocks, we were very zealous on Tesla. We'll always admit when we're wrong, guys. Tesla now taking out that right shoulder in regards to where it's going to open up today. The good news is the Bitcoin CME gap's been filled, to throw a little bit of humour in there. But Tesla, this looks like it's not going to play out now, I'm afraid. Amazon coming right down. We need to let the dust settle at this point, I'm afraid. Even gold getting hit on this. Dollar. It's annoying because things are going in the way that we wanted them to, just in a fashion that we didn't want them to. Yields, remember we were bullish on, not yields, bonds, sorry, and look at how this is now playing out. But this could be playing out on the back ends of recession or things like that. And of course, gold could be selling off on the back end of that. Oil could be selling off the back end of that too. So the question that you've got to try and ask and answer is, are we about to plummet into recession in the short term? And is that what the market's now pricing in? It's my opinion that we're not. However, this price action is certainly, it looks a lot more brutal in crypto than it perhaps is across the board. But it's brutal across the board. There's no denying that. You know, we're going to have to wait and sort of see what takes place. Didn't think I'd get these altcoins at these prices. Our head and shoulders, I'd say, at this point for Total 2 has been invalidated. Let's take a look at others. Until it goes and takes that neckline. Yeah. Chucking it down. So for me, there's a lot of sort of seeing how today plays out, takes place, and then coming with a fresh perspective tomorrow once I've seen the sort of and allowed the dust to settle. I am still, unfortunately, guys, not in the recession camp. I'm not in the it's all about to fall apart now and we're going to have this mega crash camp. I don't think that's going to be the case. In fact, I think the markets will recover from this and they will go higher eventually. It might not seem like that at the moment, given where everything currently is, but I do think that's the result that we see as at the end of this. We'll see what the Fed does. We'll see what happens today, how the US market opens, how we fare this week. It's all going to be very important. Go back to what that guy said from Bloomberg in regards to the fact that the economy really hasn't changed that much. The only thing that's changed is people's readjustment in regards to the probabilities of a recession and then valuing it more highly. You only need something to sway that in the other direction. The market's gone and recover. I don't think the recession is here just yet. The only one thing that gives me cause for concern, really more so than anything, is Lockheed Martin and their stock. So that's it from me. Hopefully we've sort of covered everything that we need to. It's got everything to do right now with readjustment coming on the back end of Friday. Obviously the Nikkei and that carry trade being unwinded and the contagion of that. And then, of course, sort of fears in regards to wars and things like this. And you've got to remember as well, guys, across the world, there's civil unrest. If anyone wants a video on that civil unrest and how they're using both sides as puppets to basically usher in laws, certainly from a social point of view, you'll notice how they're now blaming social media for what's taking place, even though they've entirely caused the problem. And then they've expected the reaction to be what we've seen, and now they're going to bring in laws as a result of it. Then we will make that second video on a second channel. We're not going to put this one at risk talking about that sort of stuff. That's it from me. Keep your heads on. Keep calm. If you're, and this is not financial advice, but in my opinion, selling at this point, you wanted to sell before if you were going to. And you always sort of weigh up your options. That's really it from me. We'll see how the dust settles. We might even do an evening video if you guys want one reporting on how the day's sort of gone. But generally, a big view of this is there's just a readjustment taking place on higher probabilities of recession, fears on recession, and people, if you've got a lot of money, you'll go, okay, we'll take some off the table here just to hedge our bets. But that'll get put back on, certainly when those fears, I think, get sort of diluted, if you will. They're very high at the moment. So that's it from me. On that note, I'm going to love and leave you. Have a magic Monday, guys. A happy Monday if you can. And I'll see you all in the next one. Thanks for watching, ladies and gents. See you in the next.